We've had Craig on the show for over a year now. I know Craig from the time that he was at university. In fact, we were in a debating team together. Craig, myself, and the chairman now of the Climate Change Commission, Dr. Roderick Carr. God, can you imagine that? The arguments, you would think. Oh, no, we didn't argue, actually. We didn't argue, really. I can't remember arguing. So I've known Craig for a long time. I've followed his career, and he's gone on to become a diplomat. Well, first an economist, a diplomat, a chief investment officer, a chief executive. He's currently chair of the local government funding agency, New Zealand Wind Farms Limited. He's got a first-class honours in economics from Otago University, an advanced management program from the Wharton School at the University of Pennsylvania. He's an associate member of the CFA Society in New Zealand. I must ask him what that is. He's also the former chief executive of BT Funds Management, held a variety of director and chair roles, including director or chair of AIG Insurance, Precinct Properties Limited, Flyway Groups Limited, and he's just been appointed as chairman of the Financial Markets Authority, which is another feather in his rather large cap, you would think. And he joins us now. Craig, well done, mate. You must be on the right side of the government.
Oh, thank you, Michael. Well, I was rung up by Minister Bailey about 3 months ago and asked to if I'd like to be the chair. I said no because I was conflicted with financial services directorships, i.e. regulated financial services directorships. So I said no. He rang me back 6 weeks later and said, can you please reconsider? So I did, and at the end of May agreed to become the chair and resign from those two directorships. So yeah, I've been in the seat for a month or so and learning, very steep learning curve for me, learning about the role of the conduct regulator in New Zealand, the Financial Markets Authority.
Yeah, because to be honest with you, I don't know what you do. And I'm not sure too many people listening know at the moment either. You're established by something called the Financial Markets Authority Act of, about 12, 13 years ago. You're responsible, as you say, to your Minister of Commerce and Consumer Affairs, who's Andrew Bailey. But apart from that, what do you do?
Yeah, so it's an independent Crown entity established, as you said, in 2011. We work to the Act, so you've got to go to the Financial Markets Authority Act and read that. But I'll just briefly summarise that for your listeners. So our main objective is to promote and facilitate the development of fair, efficient and transparent financial markets. So we're kind of conduct people, as opposed to the Reserve Bank, who looks at prudential supervision, which is, amongst other things, the capital adequacy of banks and insurers in New Zealand. So one of our key functions underneath that objective for us is to promote confident and informed participation of businesses, investors and consumers in our financial markets. So the things we do that will be familiar to some people is that we license operators in the financial markets, whether that's making sure the NZX, the exchange, is efficient and working properly, licensing financial advisors, licensing auditors. There's a range of players in financial markets that have to have a license to be able to operate. We then do supervision and monitoring of behaviour, of conduct, and provide feedback around how that can be improved by way of examples and visits, etc. And then for those who transgress, we've got an enforcement function. So we do take, we do use the law to enforce good conduct. Based in Auckland and Wellington, reasonable sized organisation that's going to grow a little bit more when we take on the credit contracts work that was being done by the Commerce Commission. We'll be looking after credit in the marketplace, and then next year, with the passing of the Contract of Financial Institutions Act, we'll be responsible for looking at how banks, insurers, and non-bank deposit takers are treating consumers. Are they treating them fairly, and how do we make sure that you've got fair conduct in that area? So it really is a conduct operation. So making sure that both the market's working properly, fair, efficient, and transparent, and that we are making sure that participants confident and informed.
To the Minister, or... Sorry, the briefing notes to the Minister, Craig. And I didn't realise, so the Financial Markets Authority was set up after the collapse of people like Hubbard's firm and a whole series of other financial companies that went bust after the financial collapse and crisis. Is that right? That you were set up basically because here we were bailing out, I think we bailed out South Canterbury Finance for something like $1.8 billion or something ridiculous. But there was a bit of a Wild West, and so the Financial Markets Authority came in after that. Is that right?
Yeah, so it was the old Securities Commission, and then post GFC, decision was made to reform the organisation to give it different powers to try and ensure that conduct was improved. So it's not about capital. That's the domain of the Reserve Bank with its prudential supervision of banks and insurers. But it definitely is about conduct. It's about behaviour. How are firms treating their consumers of their products and services.
So you're also responsible, as I understand, for KiwiSaver funds as well. So, I mean, you're not responsible for funds, but the people who manage those funds, you look after their conduct and operation too, yeah?
Yeah, so what they publish needs to be backed up by what they do. They need to make sure that they disclose appropriately. And we've published several guidelines recently on KiwiSaver, for example. So yes, we're trying to ensure the market operates in the best interests of their consumers and investors.
All right. There was a bit of criticism, this is before you were appointed, so this is a couple of years ago. There are a number of cases of financial people, mostly ex-insurance people who set themselves up as financial advisors, getting involved in Ponzi schemes and frauds and things like that. There was a fair bit of criticism the Financial Markets Authority didn't step in at that time. Have you tightened that up since then?
Well, as I said, I've only been in the seat for a month, so I'm still understanding how my fellow directors operate, the role of ourselves and the policy work being done by MB, who works on the policy, and we administer the policy. It's around making sure that we're very clear about our role under the Act. So, yeah, I'm learning about this, and I have an eye on what's going across Tasman. You'll recall the Haynes Commission inquiry into the conduct of banks in Australia was a huge event for Australian central markets, and more recently there's been a Senate inquiry into ASIC. So I think it's fair that the public is asking the question about the role of the FMA, and my role is to chair the organisation to make sure we execute according to the requirement of the Act.
And also, just to explain to listeners as well, in the briefing papers to the Minister, the Act, or the Amendment Act that came in 2022, requires financial institutions to comply with a fair conduct principle to treat consumers fairly. And I take it that you're responsible for overseeing that fair conduct program, yeah?
So I think you're referring to the conduct of financial institutions.
That's the one.
Called COFI.
Yep.
Yeah, it's called COFI in parlance, in our vernacular, and we'll be responsible for that at some point next year. So we are quietly gearing up to make sure that we can carry out the requirements of that particular piece of legislation, which is, again, fair conduct.
I'm fascinated by the issues that are in that briefing paper that you will have read too, obviously, but just to explain, you've got tackling financial frauds and scams, so that was the one I was raising. That was number one, a watch list issue for your conduct. The impact of weather events on insurance and insurers, greenwashing, so that's financial products that were being labelled or marketed as being sustainable, ethical, green and aren't, the credit union sector, and digital financial reporting as well. I guess those are the ones that were reported prior to you becoming chair in the briefing paper to the Minister, at the end of last year. Is that pretty much where your sort of thrust of operations is going to be, do you think? Or you're adding the banks, just noticed in that conversation, Craig? Yeah,
so we're taking on banks and insurers with fair conduct next year. So, you should read that briefing to the incoming minister in addition to the letter of expectations that the ministers provided to us. So you've got the briefing going in just after the election last year, then you've got the minister with his letter of expectations around what he would like to happen with the emphasis of the organisation. So I think, the public should read both to get a feel for direction.
All right, well, we will. And again, congratulations upon that. Listen, you've done so well. It's delightful to see somebody from Otago University is succeeding and not having to chide them for changing their logo or, I don't know, going all PC or something. Now, moving on. Yesterday, Reserve Bank Governor kept the official cash rate at 5.5. I think it was widely predicted. You said the same thing as well. Are you picking any change at all, do you think, in the official cash rate at all this year? Or do you think, no, this is it?
Well, the language has changed since last statement. It's slightly different language. So I think if you read the press statement, policy remains restrictive. So on the face of it, there's no change. They're sort of qualified by the Reserve Bank saying that headline inflation is expected to reduce to between 1% and 3% in the second half of this year. So that's an update from the last statement. But it refers to headline inflation, and you might recall that the Reserve Bank's been quite concerned about parts of headline inflation, such as the non-tradable sector, which has been sticky. So on the face of it, that's progress, but there's some deeper issues I think they'll still be considering. And they sort of sum that up in their press statement by saying the extent of current restraint, will be tempered over time, nothing necessarily new in that, consistent with the falls in inflationary pressures. And your readers and listeners and watchers will be quite well aware of the labour force is much more easy now than it was 12 to 18 months ago. There's less jobs available to look at the SEEK job ads. The businesses' profitability is more difficult. Consents in the construction industry challenging. So if you look around the marketplace, most people will be facing, more difficult times, and that just leads to a reduction in the possibility of putting up prices in general, but there are still pockets of inflationary pressures that we've spoken about before. You're well aware of these: rates, insurance, utilities pricing, telecoms and power. So those things are still ticking along because of their particular positions in the marketplace. So I think the bank has become more conscious of the operating environment, and that's why the language is there. But there's no clear notice yet that the OCR will drop by the end of the year. However, the markets believe that will be the case, and they're beginning to think about OCR reductions in the second half of this year.